Hey everybody, it's Russell Gray, co-host of the Real Estate Guys radio show. And today we're putting together a special tutorial on one of my favorite topics, silver. A lot of you know that I am the financial strategist of the show, and I started my career in paper asset financial assets or financial services. And in the course of doing that, I began to realize that there was a whole host of assets called real assets that the people in the paper world really didn't use, really didn't understand. And so that got me into real estate and took me into understanding how to use debt and mortgages and ultimately collecting dollars. And as I began to study dollars and currency in general, I came across the concept of precious metals and understanding the role of precious metals. So I've invited our good friend Dana Samuelson from American Gold Exchange to join us today. Hey, Dana, how you doing?
Hi, Russ. I'm doing great. Great to be here with you.
We're going to have a great conversation. We're calling this everything you've always wanted to know about silver, but didn't even know to ask. And it really is kind of a play on where I started. So Dana, if you'll forgive me for just a minute. In fact, let's do this. Dana, why don't you just take a minute and explain to people a little bit about your background, your history in the precious metals industry and what makes you an expert?
Well, I've been in the precious metals industry my entire professional career. I got a job literally right out of college in 1980 working in a vault, counting, shipping, weighing. Then I got a job with the biggest retail coin company in the country. I learned to appraise old classic US gold and silver coins. Then they bumped me up to their trading department, and I got to buy and sell with the industry, about $50 million a year for about 6 years. Got to know everybody. And after 18 years of going through a career like that, I started American Gold Exchange in 1998 as a physical precious metals dealer. So that's what we do. We buy and sell physical fabricated precious metals. Been doing it for 22 years now. And I've also been a member of the Professional Numismatists Guild, which is the leading organization of rare coin dealers. I was on their board for 12 years and I served as president. And part of my presidency, we established the Anti-Counterfeiting Task Force, which is to combat counterfeit and spurious merchandise, which is a big thing in the industry now from interdiction point, because we're getting some stuff coming in out of China that's just not good. So you have to be a little wary. So from soup to nuts, I've done just about everything in the business over 40 years. There's very little about the physical business that I don't know, if I can toot my own horn that way.
Yeah, no, that's great. I mean, one of the things that I love about being the co-host of the Real Estate Guys radio show is that I have a big collection of subject matter experts like yourself that I can pick up the phone and schedule an appointment. And, you know, we have had many times over the years these wonderful conversations. And one day the light bulb went off. I'm not that quick. I said, you know, I could probably record these and share these with people and they would enjoy that. It doesn't really fit into the purview of our regular weekly radio show and podcast, but now that we're really more active on our YouTube channel, it makes a lot of sense to do these recordings. And so that's what we're doing. I'd like to take just a second and talk a little bit about why all of this matters. I mean, you might wonder, what the heck is a real estate guy talking about silver for? And so if you really think about what real estate is and why people invest in real estate, it's because they want to make money. Their goal is to make money. They want to become wealthy. And if you really think about it, what you want to do is accumulate the efforts of others, which is streams of rental income. Maybe you make loans and you collect interest payments. Investing, true investing, is about accumulating passive income. So I don't look at buying silver and gold as an investment or a trading vehicle. I'm not about buy low, sell high, and try to finish the round trip with a pile of paper or digits in my bank account. But yet at the end of the day, you're going to be dealing in a lot of currency. And so I think the first and most important thing to understand is the difference between currency and money. And they used to be one and the same. So when and Dana, you probably know the history a little bit better than me, but when our country was founded, the United States of America was put together, the Constitution laid out that the money was going to be specific units of gold and specific units of silver, and the government was specifically prohibited from using paper money. Is that the way you understand it?
Yes. Yeah. In fact, our money, our currency for, from 1793 to 1933 was gold, silver, copper, and nickel. The earliest copper pennies were about this big around, the size of a $50, because that's what a penny's worth of copper was worth in 1793. So
Yeah, so these were actual commodities. The coins were made out of metals that had actual value and utility. And so that's how people traded. Of course, it got to be cumbersome, and some brilliant person came along with the idea of creating a coupon or a note, which was the idea that you get a piece of paper and then it was redeemable. You could go take your silver certificate or your gold certificate down to the bank and trade in the bill or the paper for real money. And so there was a difference. You used the paper to exchange as currency because it flowed through the economy more easily than running around with bags of metal in your pockets. But ultimately, you could go redeem it for money. So it was just a claim on wealth. It wasn't wealth. The way I illustrate it to people, and I've struggled for years trying to get people to understand it, but I remember being a coin collector in the 1960s when I was a child. And I remember watching the coins, the nickels or the quarters, the dimes and the half dollars, and even the silver dollars change, because they started going from being silver or white on the side to where they had zinc plating, which was brighter. And then on the side, they looked more like pennies. They were made of copper. So they were more like tokens and they were no longer really money. But I didn't understand what was going on. But here's the way I explain it. In 1965, you could buy a gallon of gas for 25 cents. So go look it up, right? I'm not making this up, but you could buy a gallon of gas for 25 cents. If I took a roll of quarters in 1964 quarters and went down to the gas station, I could buy 40 gallons of gas. So I could probably fill up 4 cars or maybe 3 cars with that one roll of quarters. Think about that. Now, let's say in 1965, I decided to take a roll of 1964 quarters and a roll of 1965 quarters. Both of them in 1965 would purchase 40 gallons of gas. And I put them in my sock drawer, and I'm Rip Van Winkle, and I go to sleep, or maybe Captain America, and I go to sleep, and I wake up 50 years later. I wake up in maybe 6 years later. I wake up in 2020 or 2025, whatever it is, however many decades later, and I pull both of those rolls of quarters out of my sock drawer. The 1965 roll the 1964 roll will still buy me 40 gallons of gas, but the 1965 roll will only buy me 4 gallons of gas. I've lost 90% of my purchasing power with the 1964. Dana, what happened?
Well, we saw the silver came out of the currency in 1965, as you explained, and we went to true fiat currency with coins, like we did with paper money in 1971. So we've seen the precious metals prices versus the dollar just continue to gain over the last 40 or 50 years in value, or the dollar actually losing value against precious metals prices.
Right. In this case, 90%. So
right.
that's why this matters, ladies
Right.
and gentlemen. That's why this matters. Because if you don't understand that much of the thinking about money and debt and savings and the way the world works was all based on the idea that money and currency were one and the same. But in 1933, we took the gold out. And in 1964, actually 1965, we took the silver out. And so using that illustration, if I were to take the 1964 quarters and want to buy gas, I couldn't just take the money, which is the roll of 1964 quarters of silver, and I couldn't just take it to the gas station, because they would only give me 25 cents value. So I could only buy 4 gallons of gas if I tried to use the roll of 1964 quarters as currency. So I wouldn't want to do that. I would want to convert the money into currency and then go use the currency to buy the gas. So there's a conversion process you have to do. So a lot of people are familiar with currency conversion. If you go to Mexico and you want to change your dollars for pesos, there's a currency rate, and that exchange rate varies, but you want to do that. If somebody says, oh, this is 5 pesos, you wouldn't want to give them $5. I mean, that would be insane because the dollars are worth a lot more in pesos, but in order to spend them, you got to convert them into pesos.
Right.
It's the same thing here. And so people need to understand that, number one. So there's a website called Coinflation, coinflation.com. And if you go to coinflation.com, you can look up the metal value of real coins that have real precious metals in them. And you can verify that go online and you can verify that in 1965, a gallon of gas cost about 25 cents. And you can go on to coinflation.com and verify that a 1964 quarter in today's dollars is worth about the same as a gallon of gas. So in terms of purchasing power, you retained your purchasing power by keeping your savings in money. Whereas if you would have put your savings in currency, which is the 1964 quarters or a passbook savings account or a $10 bill, you would have lost 90% of your purchasing power. So as an investor or anybody who's out there earning money through whatever mechanism, and you're trying to preserve money savings for some future date, save for something down the road, if you try to save currency, you run the risk of being a loser in terms of real purchasing power. So that's what inflation is. That's how precious metals hedges against inflations. It's why guys like Robert Kiyosaki call savers losers, because they're trying to save currency, mistakenly thinking it's money. Nothing wrong with saving money, but you just need to know the difference between money and currency. Any closing thoughts on that topic before we move on to the next one, Dana?
Well, Robert Kiyosaki also calls gold and silver God's money. You know, they're made and they're universal. They've been universal currency for most of man's time on the planet. Over 2,000 years, gold and silver have been used as money. And every time we've had a fiat currency come up, it's usually signaling the end of the beginning of a decline of a civilization. Now, the U.S. went off the gold standard in 1971, and we had a bout of inflation in the late 70s that was enormous. Since then, the whole world has printed fiat money like crazy, and that chicken may be finally starting to come home to roost, because the world is awash in paper money. But as Bank of America recently said, you can't print more gold, which is why they raised their gold price forecast from $2,000 to $3,000 an ounce, because the paper money, the more they dilute it, the less purchasing power it will have. You know, my dad told me in 1964 he could buy a martini with a silver quarter. You know, today he could buy a martini with 2 silver quarters. It'd take a lot
It's
more
interesting. We did a field trip to Atlanta, I believe it was, and we visited the very first Chick-fil-A restaurant that was ever opened. And part of the tour was getting a copy of the menu from when they first opened. And when you look at the pricing, it's shocking. I mean, you could get a steak dinner for like 35 or 65 cents. I mean, it's just insane, right? So I actually took a photocopy of that and included it in the Real Asset Investing Report. So if you're watching this and you want more information about just understanding what we're talking about and how this really matters to you as an investor in the long term and in the short term, but as we're going to talk about shortly, why it matters today. We're recording this in July of 2020. Even though this is a timeless topic, where we're at in the cycle is probably more urgent now than ever that you understand it. But anyway, if you want to copy that report, just send an email to realasset@realestateguysradio.com. That's realasset@realestateguysradio.com. Put it in the show notes below. And you can get a copy of that report, and you can see a copy of that old Chick-fil-A menu, which is fascinating. Okay, so Dana, we're going to wrap up this first segment, and then we're going to come back and we're going to talk about why all of this matters now and where we're at in the cycle. You alluded to it. We're going to go a little deeper in the next section. Thanks for being part of part 1.
Thank you, Russ. Great to be here.
Hey, thanks for watching our Silver Investing Series videos. We hope you're getting a lot out of them. Before you go, 3 things. Number 1, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number 2, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number 3, share. Please share this information with friends, help them get on board this bus, help them protect and preserve their wealth to take advantage of what's going on in the world today. All right, thanks so much, and we'll see you in the next video.